It's Friday, which means it's time to get real with real estate. Justice Smith and Andrew Rink in studio. As always, a pleasure to have you both here.
Thanks.
Thank you.
So we're talking interest rates. They are on the rise. Justice.
They're on the rise. You know, it's not a sudden surprise, though. These higher interest rates, it's been telegraphed in the industry for a long time, so it's really no surprise. They've been historic lows, and even with the rates increasing, if you look at the historical time period, you know, they're still low in comparison to, you know, 5-6 years ago. Yeah, I remember,
really?
You know, what my rate was back then, and seeing it come down has been nice. Now, you know, what goes down must come up.
Absolutely. So, Andrew, what effect does this have on the real estate market for, say, buyers, sellers?
Yeah, there's a couple options there. So, if you're a buyer looking to purchase in a time like this where rates are going up a little bit, we've got a graphic that we can show you exactly what we're talking about. On the screen there, for our example, this one is for a buyer looking to purchase a $400,000 home with a budget of $1,850 a month. Now, this is a 25-year amortization mortgage with no CMHC premium, so they've had 20% down payment. You can see that they're at 2.75, which is the rates on the left-hand side of the screen. You can see that at $400,000, your payment's about $1,842 a month. As rates start to creep up, you can see that those payments can purchase less and less of a home, all the way so that if you move to the far left, where it says $360,000, at 3.75% interest rates, if that was the rate, which is kind of what we're trending towards, your purchasing power is only $360,000, which is a 10% decrease from the $400,000 originally wanted to purchase. So big difference that these make. And the other thing to notice or mention too is that as rates climb, less and less of your money is going towards the principal and more is going towards the interest, which is the profit for the banks.
Yeah, which no one likes.
Which no one likes. So it, you know, as an individual looking to purchase, it changes things drastically, really does.
Just for sure, Justice, what can someone, a homeowner or buyer, do to prepare for rising interest rates?
The best thing to hedge yourself against rising interest rates is to lock in mortgage pre-approvals. They're there, they're fantastic. I'm surprised, you know, that more people don't take advantage of them. If you lock in a lower interest rate, you have a period of time, which is about 120 days, in which to take advantage of that lower rate. And if rates go up, you still have that lower rate that was promised to you. And you know, if rates go down, you're still going to get the lowest rate. So you can't lose. And you know, take advantage of that. There's still some quick close rates out there right now. Some people who did have the pre-approvals. So you can still jump on a lower interest rate at most banks. So you know, take advantage of that. It's a good time to buy.
Some great advice, some great stats. So guys, if anyone's looking to get a hold of you for more information, how can they contact you?
www.propertypartnersrealty.com.
Thanks so much. Once again, Andrew Rink, Justice Smith, and Danielle has something sweet coming up in 8 o'clock. Danielle.
Lindsay Dunn, you would pass out by the mere smell of